Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello again, welcome to the COB. I'm Juliette Sarley. Great to have your company. It has been a great day on the local market. Can't believe though we're halfway through January already. It is quite extraordinary. Up 0.6% there on the CBO 200, as we finish out the day's trade. The ASX 200, let me show you where that is, up 63 points, 0.7%. 8,822 is where we sit at match off, a 20-day high, up 1.6% over the last 5 sessions. Still about 3% off all-time highs, but of course US markets, Japanese markets, European markets hitting records. I should point out as well that there's been quite a bit of momentum coming through in the yen, plunging to its weakest level since July 2024, following a report that Japan's PM may soon call a snap election. And of course, when you see yen weakness, you do see Nikkei strength. Let's bring it though back to what we've been seeing on our market and the themes of the day, really this copper charge. I mean, all these commodities looking very solid, but the fact that copper is going to be used for the AI transition in these data centers. We also, of course, had investor optimism about robust demand from top consumer China. So copper getting back to that US $13,000 at or near records. And also I should point out that you've got gold pushing through 4,600, which happened about 24 hours ago on the back of what we saw between the Fed and Jay Powell and President Trump. But all of these momentum, or this momentum I should say, in resources stocks really helping to lift our market today. A bit of consumer concerns though. We had that really solid household spending data for November coming through yesterday. That is of course backward looking though, when we looked at the Westpac Melbourne Institute Consumer Confidence Survey. Well, it soured in January, still showing more pessimists than optimists, remaining below that 100 level. Of course, it dipped quite significantly in the month of October and fell another 1.7% in January to a reading of 92.9. The main catalyst here really seems to be the sharp turn in rate expectations. About 2/3 of consumers expecting mortgage rates to move higher over the next 12 months. That's more than double that in September. And then, of course, all eyes on that CPI data in the US tonight. Let's run through some of the sectors. We are so lucky to be resources heavy on a day like today. Having a look at some of these copper players, Sandfire, Capstone, BHP, Hot Chili, all looking really, really good. To the gold space now, Northern Star up almost 4%, Newmont $167.52. And of course, a lot of focus on rare earths as well, particularly amidst, the Treasurer being in Washington to discuss Australia's $1.2 billion critical minerals plan. Lynas and Iluka particularly looking very solid today. Some of the other corporate news we're following: BHP reportedly not planning a counter bid for the Swiss mining giant Glencore, according to Reuters sources. Lynas, we touched on there as well. Amanda Lacaze, the CEO, stepping down after 12 years in the role. Fletcher Building a little weaker. It did though say there's been a modest improvement in some of the key product sale volumes for the December quarter. Endeavour Group, that was our stock of the day. Not a great session for Endeavour. In fact, its worst session in 10 months after a profit outlook miss. And GQG Partners tumbling to a 1.5-month low on weekly, quarterly funds under management. Let's make sense of the day's trade and welcome for the first time of 2026 to the COB, Mark Gardner from MPC Markets. Hello.
Happy New Year. Happy New Year to the viewers.
Indeed. I mean, that time went so quickly, didn't it? But anyway, here we are back again
Yes,
to
indeed.
discuss the markets. You are writing our view for us in our newsletter. Of course, if you haven't signed up to that, ausbiz.com.au/newsletter. But you've talked here about, be fearful when others are greedy, greedy when others are fearful.
Yeah, essentially this sort of comes back from, you think back this time last year, if you're a lithium investor and a material sector investor, you're feeling probably just how the Australian tech investors and healthcare investors are feeling right now, feeling very fearful and going, when is this ever going to turn around? And here we are 12 months later, and materials have been the best performing sector last year, and they've gone on a tear straight away at the start of this year. And look, there's some really good quality compounders there that more often than not, and from doing the call over the last 5 years, is you never tend to get them at a reasonable price. You're always sort of paying on hopes of forward multiples, and I mean, the likes of even CSL I think it hasn't been at this price earnings ratio since 2011.
Wow.
So you're getting that at 18 PE. And there's just Life 360, Telix, Catapult, Zero, they're all trading at multiples we haven't seen in quite some time, and quite a few of them are off 50% from their October peaks, which is not that long ago.
So they're on sale maybe.
But look, it is a momentum market, and you may have to wait, but it's certainly worthwhile, starting to dig into some of those, because they, the narrative really hasn't changed for those companies. Their performance hasn't changed. There's an acquisition for Zero, etc. But I think Zero traded nearly $200. It's back at 107. So it's one of those occasions where, like we were doing last year, and we had a fantastic last year. We long copper, silver, gold. Gold was doing well, but the silver stocks weren't, and they ended up being the best performers of the year, up 170% for the silver price. So we were feeling the same way about those trades this time last year, and I put a note in my diary for myself basically to go see if there's any bargains around this year, and that was sort of what I came up with overall. So Life 360 is another one that's come screaming back off its highs, and nothing's really changed. And I've not traditionally been a fan of Life 360 because it's traded at that premium. However, it's fallen away 46-47% since October, and not a lot has changed at all, if anything. And they're still pulling those numbers. So they're like-for-like companies with the same user growth in the US and the same revenue numbers are now trading at a 20-25% premium.
Yeah. So, hey, we're about 2 weeks away from reporting season, which is frightening. If you look at Endeavour today, it missed analyst expectations. It got whacked. Is this sort of, again, what we're going to be facing? You really got to beat the street here.
Look, I think that it is a much more dangerous game than it used to be, and I think the bar is much higher. So we really take the tack now that, if you're going to do anything pre-earnings, you need to be happy to be stuck with it, or have some more ammunition to add to it. And those traditional sectors that have those big uplifts, which quite often are tech and health, aren't really the ones that are in favour at the moment. So I think the materials sector, particularly with that rally in copper, BHP will. I don't think this earnings, but potentially if it keeps going, copper keeps going, iron ore becomes the second biggest commodity potentially. But you've got to. I think BHP is the third biggest silver producer in the world. They also, they've got other commodities there, the likes of South 32, which is a bit of a mixed and mottled mess, and people go for more pure plays. All of those fringe metals have rallied and commodities have rallied. Rio's got quite a lot of aluminium in there as well. We've seen the likes of Alcoa offshore go really nicely to the upside. So I think there'll be some nice surprises in there overall. I don't think it's a market where you want to be buying. Judging on the last 2 earnings seasons of 2025, you don't want to be buying at highs with momentum on a wish. We've had 3 or 4 good years in a row. It'd be more of a tactic to maybe, if it comes out good in the market, or better than expected, and the market wants to run with it, go with it, or buy the dip. But I don't see the risk reward is not as good, nowhere near as good as what it used to be, because those gap opens can really hurt you.
Gap opens. All right, let's talk about inflation in the US. What's happening with the fed up Trump and Jay Powell?
Yeah, it's pretty extraordinary. I'm 30 years this year in markets, and I was an interest rate trader for 25 of those. The fact that a central bank chair or governor had to come out and say that is quite extraordinary. But here we are on the 13th. We've had Venezuela, but then everyone questioning, potentially who's next, and Trump just answered Greenland. He's apparently capping credit card interest rates at 10%. He's stopping funds from buying single-family homes. He's made more announcements in the first week than most presidents do in a year.
Anyone would think it would be a distraction from something else that could be happening.
Yeah, who knows? So that blitzkrieg it makes a lot of things white noise. But overall, one thing we've really picked up on is, a lot of ASX investors get their exposure overseas through ETFs, and we're strongly suggesting that they do it in the hedge format where they can, because I think the Aussie dollar will attract a fair bit of investment this year. We're the biggest, most secure and stable mining stock market in the world, but and we'll see money inflows if China even smells like recovering and iron ore starts to recover. I mean, the Aussie dollar is going to head higher. Not to mention all the issues. I mean, the list of issues that would be as long as your arm with the US dollar. I think it's just a smart, very small tweak that you can do, because if you set those ETFs might average 10-20% tops. If you get an Aussie dollar rallying 10 odd percent or so, you've given away all those gains, and it's hard enough to pick the market, let alone getting hit by the currency. So, but I think there's a lot of reasons to like the Aussie in the coming year. I mean, apart from the interest rate differential, etc. But everyone is scrambling for supply, for their supply chains. We don't have a just-in-time supply chain anymore. It's we saw what happened when it broke down in COVID. Everyone is scrambling to lock down raw materials, because nothing really gets made anywhere in the world with materials from all in the one place, and we happen to have a great deal of them in this country, and a stable mining sector.
Yeah.
So I mean, we may see quite a bit of interest this year, which has been missing for the last few years, and it could continue to be a really good year for the materials sector.
Yeah, that's really interesting, because I was at the UBS conference last year as well, and the name escapes me now, but one of the offshore investors saying, finally America is kind of almost waking up to how significant it is to be in the Australian market as well, given our exposure to resources.
Well, yeah, I mean, and look, a bold move like Venezuela, and but if you look at the underlying, not just the headlines of the things that are being said, that I mean, China's been well ahead of the game, but at the end of the day, there's been a lot of things. When Ukraine was invaded, that caused a lot of kerfuffle. It slows manufacturing. We're not in the same world we were 10 years ago, where you had a gamut of suppliers and a gamut of places to get your natural resources, and that's where we're extraordinarily lucky, because we're quite friendly with most of the sides in this equation, and we've got a lot of resources to push out, and a very investable materials sector. So yeah, I think it'll be a pretty good year for the Aussie market, and one of those rare occasions where we might actually outperform.
Amazing. They don't call it for the lucky country for nothing, do they, Mark?
Indeed.
Thank you. Good to see you back. Mark Gardner there from MPC Markets. Getting back to stock specifics, and I mentioned, of course, that Endeavour was the stock of the day, and Nadine spoke to our experts, Sanjeev Narendran from Team Invest, Rudy Philippek Van Dyke from FN Arena.
They need to get through a lot and get their strategy right, and actually start looking at growing the business, because the business has been around 4 years, so it's still way short of what we'd look at Team Invest, but it's a business where the profitability's gone nowhere. So before we'd consider looking at it as an investment, I'd like to see them do a bit more.
And I'd be very cautious with consumer sentiment companies. I'm a shareholder myself in Sigma, and I think that's one of the better ones, least risky ones at this point in time, I think, in that sector, and that is probably also reflected in a higher valuation. So, in this case, I don't think you should chase it because it's cheaper and it's falling. If you already own it, you probably own it for the defensive characteristics and for the dividend yield. Now, the dividend yield thesis that remains intact. But I wouldn't expect too much in terms of share price performance at this point in time.
Let's have a look at the market leaders on an up day. Austal, Iluka, Imdex, Greatland Gold, Ora Banda. We've gone through the reasons why a lot of these stocks moved higher. To the downside today, GQG Partners on its update, Zip as well. Catapult, interesting, Mark, saying that that is one that's sort of been trading at a bit of a discount. And Viva and Ampol also under pressure, even though we've seen global oil prices at 7-week highs. In the small end of town, these stocks had a great day, including a lot of these lithium players. I just note Macquarie had a note out on its lithium target as well. Delta Lithium up 8.5%. To the downside, though, Findi down 29% on its market update, and European lithium down 9%. Tonight, the Bank of England Governor Bailey will speak. US inflation is the big one, of course, and the US NFIB Small Business Optimism Index. Don't forget as well that its earnings, JP Morgan Chase, BNY Mellon, Delta Airlines, all expected to come through. Of course, those banks and consumer stocks like Delta, very important to tell us where the US economy is at. Job vacancies for November coming through tomorrow, noting that private sector ads are down 3.9% year on year. So recapping where the local market has finished the day's trade up 0.7%. The ASX 200 has climbed almost 50 points, 0.6%, 8,808. A new 20-day high, up 1.5% of the last 5 sessions, about 3% off its 52-week high. But Mark Gardner, so many of our guests really think that 2026 is going to be a great year. All right, that does it for today. We'll be back from 9:45 a.m. Eastern tomorrow.